Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, April 24th, 2013. We're looking at a few U.S. markets today, and basically want to point out that this is it. For me, from my analysis, this is the top is about as high as I would expect prices to go. Anything beyond that, if we were to rally tomorrow or something like that, that would be something I had not anticipated. So now you know where I'm at, okay? Looking at the Dow Jones Industrial Average, I'm actually surprised to see that it was the one that was down today because the Dow Jones has been the one that's been fighting it the hardest for all this time period. So looking at it now, seeing that it was the one market that was down, it was actually an interesting sign for me. The main thing with this chart, of course, this is the first shoulder formation that we're looking at. This is the head formation, lower low here, and then we come up here for the formation of the second shoulder. Expect to find the peak here roughly in line with the previous one. That's normal, and then we're looking at this to start to roll over here. Keep in mind we have GDP numbers that come out on Friday, so that's going to be a major mover of the market. Looking at the low close here and then the lower close here, you can see this is where we've drawn our neckline like so, and then if we actually get down here and close below that neckline, we would then measure this distance out from the high point of the head down to the neckline, do that mathematically, and then subtract that number from the breakout point, and that would tell us how low we go before we start to find some kind of support, some kind of a bounce point. Alright, so that would be an important little piece of the puzzle to keep an eye on into the week ahead. Looking today now at the NASDAQ, the same basic overall story. We're seeing here kind of a topping pattern, and you can see it from different ways. One of which we look at the size of the candlestick, large, smaller, medium, large, and then you get to really small. When it starts to tighten up like that, this is basically showing indecision by traders. It's what happens when you get that kind of signal like that. Okay, so again, I'm not seeing anything here that would be bullish. Again, you could look at this and say, well, you had close here, then you gap up. The next day, you had a close here, and you gapped up, and then this time you gapped down. Again, showing a decrease in that momentum to the upside. Also, overbought condition being hit on the ultimate oscillator at 69.72. Expect to be finding resistance there. And at the same time, we can use the same condition here. We see a shoulder, come down to the low close, head formation, and come down to the low close, and then come up again, form another shoulder, roughly the same level as you saw before. All that's in line. Everything is what we expected to happen. Again, if we were to start to rally and take off tomorrow, that would be different. That was something I had not anticipated, but right now everything is in line. And it should also be noted that just because you have an up day, like today was an up day, you should pay attention to analyze that, because it's not really an up day. It looks like it is because the close was higher than the previous day, but actually what you have is just rolling over. You're seeing the same thing happen in gold here, and that's nothing that concerns me. It's not really an up day. I mean, it looks like it is, but it's really not. Okay, we're just rolling over here. That's typical, and that's how you have that kind of stuff happens. You have 1, 2, 3 days here, 1 day to down day, then 1 day back to the upside. I mean, this isn't actually going anywhere. It's just rolling over. So learn to spot that. Okay. What would I expect from this chart moving forward? I would expect this to continue to roll over and then start to move lower here. Keeping an eye on this low point here, on low close here, and this lower close here, expecting this neckline to be broken, and it's a very bearish sign because the neckline slopes negatively substantially to the downside, and that means when we come down here and we close below that, then we can measure the distance from here all the way down to the neckline, measure that out mathematically, and subtract that from the breakout point. It tells us how much further to the downside we're going to go before we get a bounce, and we have a lot of downside potential here, again in line with what we expect. Quick little side note on the XOI oil index. This is one that we advanced the stop loss limit on. We talked about shooting short here, we talked about it here, and we advanced the stop that was set off the high, and we moved it on down here because we expected this little bounce to happen. So the bounce happens. Now we've had 5 consecutive days to the upside. That's, as you know, it's above, well, it's within the range of average. We start to expect to find some kind of a peak after that. So after the 5 consecutive days, we're at the 50 period moving average, where we expect to look for our best entry opportunity on the short side. So this point here and higher, if we get another day or something like that, or a little rolling over pattern kind of going on, all of that would be where I'd be looking for my short. I haven't taken it just yet, but I could see why somebody would right here, keeping a stop, just resetting your stop at the previous high, and just continue to watch it. As long as it continues to break down, getting a lower series of highs, lower series of lows, that's great. That's what you want to do, is look for those short opportunities. Quick little glance here at the Russell 2000 Small Cap Index. I don't really think there's anything I could possibly add to this after yesterday's video. I would like to apologize for those of you who I might have offended, not the hater, but the other people. I it was not meaning to offend anybody. I was on day 2 of quitting smoking, and yeah, it happens. Okay, God bless. Take care. Overall view of this market chart, nothing new to talk about here. Move up here today, I would be seeing that as it's it. I don't anticipate any more moves to the upside here because everything would be in line for the shoulder formation here, head formation if you want to do it like that. Second shoulder coming up roughly the same level as the previous. That's it for me. I start to expect this to start to rolling over, and I think you're actually starting to see that anyway. If you look at the actual candlestick sizes, you can see the large candlestick here, smaller here, smaller here. You're starting to lose momentum there up above this 50-period moving average, which is where you can look for your best short opportunities. I also point out this high point here, and this is higher than the previous one here, so you can see like this, and the same time period, the corresponding closes will be here and here. You're doing this little number. This is also telling you look for another move to the downside. What's happening here is momentum is stronger than it used to be here. However, you don't have the buy pressure, sell pressure is too strong at this point, and so that's why you end up with that another move to the downside. Which again, this low volume gap here would also call for a move to the downside. So all in all, it just looks normal to me. Continue to watch. Quick glance here at the SPX, and basically in line with what we're seeing on the Dow Jones Industrial Average. You've got this little shoulder formation here, head formation here, lower close, and keep tabs on that because it's going to alter how you're going to, or it's going to determine how you view your neckline. We'll get to that in a second. And then you had that shoulder formation. Right now, this is actually perfectly a perfect scenario. We just start to roll over and go lower. If all of a sudden we just break out like that, that would be okay. So that I had not anticipated, we'd be stopped out of the S&P 500. We would expect the same thing would probably happen on the Dow Jones. We'd be stopped out of both of those, and that's actually kind of normal. I get stopped out of these guys all the time. Whenever I try to call their tops, it's pretty normal. But all in all, you take all the overall charts together and you say, okay, well, we're calling tops on all these, and you get a couple that get stopped out on. Not a big deal, but that's why we have so many different positions. But the main thing here, when looking at it right now, I don't see that. I see what we're doing exactly what we expect to be doing. You're getting up there in the overbought condition to 71. We start looking for the top formation here, here. All this is normal. So all we're doing here right now is just looking for this to start confirming that topping pattern. So we get the first shoulder, comes down to a low close. I think it's this one here. And we bounce up here, lower close here, and come up here and we start to roll over again. That'd be fine. Also note today's candlestick formation and doji shows indecision by traders, no strength there. Starts to roll over. That makes sense. We look at this neckline here, sloping to the downside, same basic overall condition. Measure this distance out, subtract it from the breakout point, tells you how low we're going to get going before we get some kind of a bounce activity. Quick little glance here at the VIX, or the Volatility Index. This one runs the inverse of the S&P 500, or the opposite thereof. So if you're seeing bearish signs on the S&P, you should see bullish signs on the VIX. And that's exactly what we're seeing. You can see we are in an uptrend. You have higher series of highs, higher series of lows forming here. And then we've pulled back down here. Whenever you're in an uptrend, you look at the 50-period moving average, that red line right here, as being the best entry opportunities for the long side, right? It's the red line here. So we'll be looking for this and this to be buying opportunities. That makes perfect sense to us. Also, I want to point out that this candlestick formation here is calling for reversal to the upside. So is this one. So you have the early warning signs telling you look for this thing to bounce. And again, ultimate oscillators down here below the 30 line, also telling you look for this thing to bounce. Everything would be in line here. There's nothing I could say that would be changing here. It completely confirms. Just look at the technicals. You can see that this confirms what we're talking about on the S&P to being preparing to break down, and the VIX preparing to shoot to the upside. Last but not least, look at the EMW, the Wilshire 4500. And this one, it's pretty simple trade. It's got nowhere to go. This is the major problem here, and there's a couple other charts in U.S. markets had the same condition where the ultimate oscillator got substantially overextended and then start rolling over. So basically, this point here, any price activity were to go beyond that point right here, were to go beyond that, whether it does it here, whether it does it here, even if it could muster steam and say, we're just going to keep on going, I don't really think so, but if it could, all it would do is form another bearish divergence telling you it's not sustainable, it will break down. So again, you would end up with this massive move to the downside. Right now, I wouldn't expect a big move to the upside making new highs. I would expect this to start to peak and roll over relatively soon. You've already had 4 consecutive days to the upside. You're within range. This is the same basic level that we're seeing resistance at, so anything coming up here and falling away from that would make sense too. But keep it at, it's just something that I would be bearish on here. No reason to be bullish whatsoever. Even if you broke out to the upside, you would have conflicting signals. You would have a scenario where you have higher highs and lower lows. That would be, a 50% chance that I'm right, 50% chance that you're right. So it would not be something that's clearly defined in any one particular direction. I'm just calling it ahead of time, saying this is breaking down, it's preparing to crash. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and we only insult you sometimes. And most of the time we don't, but every now and then we do. Okay? God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.